Next up, we're going to talk about BHP Billiton. It's the world's largest diversified natural resources group with a combined market cap of 995 billion rand. It is focused on iron ore assets in northwestern Australia, copper in Latin America, and oil and gas in the Gulf of Mexico. It has no price to earnings ratio and a dividend yield of 7.3%. It does make a profit, BHP Billiton, it definitely does, so it will have a PE. So let's talk about their gas assets. So they've always been pretty involved in the Gulf of Mexico, the offshore drilling and so on. And then in the last few years, they bought some big natural gas on land assets in Louisiana and around the Texas area. Huge write-downs from those purchases. So the timing hasn't been great, but they certainly saw gas and oil as a big component in their four pillars.
I think so. If you look long-term wise, the timing certainly sucked on that front. We normally break Billiton down to say it's 35% of revenue comes from iron ore, 25 from oil and gas, and 25 from copper, and 15 from coal. So just to see where the mixture.
So it's about a quarter of the business. So
yeah, so it's about a quarter of the business. We know on the iron ore side, these guys are the leaders, so they're still making money on that, even on these low prices in the iron ore environment, and they'll probably still be pumping. The diversified mining group, that's probably the strongest balance sheet of all the miners out there. Some of the smaller local ones might be a bit stronger on balance sheet side, but certainly if you compare this against the Rio Tintos and the Anglos and the Glencores, etc., this guy got the best balance sheet. As you said, from that side they had impairments. It looks like they're actually making losses on the petroleum and gas sector that they currently run. So they got a bit of a tight margin on those.
The oil business is doing fine, where they're drilling in the Gulf, and then the gas is sucking all the capital.
I think so, and they probably pay too much. So you're seeing some of these impairments. But if you're a long-term investor, we know these guys normally make the right decisions. They certainly did over the last 15 to 20 years make better decisions than some of the peers. And that might still be a booming industry in a few years from now.
Well, let's have a look at the share price there, and it has seen some better days, but comfortably outperforming the likes of Anglo and Glencore, the other diversified miners, as you mentioned. They've definitely held on to the better assets, been more conservative, haven't made whopping decisions, although fortunately, the likes of the potash deal fell through, exactly. So going forward, I still want to focus on the gas and oil sector of this business, because 25% is pretty significant. Let's just talk about the fracking, because they are very much involved in the States there. The ability of the frackers to sort of switch off when the price goes off or the price comes down, and then switch on again, basically running into production within a month. I mean, surely that's very advantageous for a business like Billiton.
Yeah, I think so. I think it's great for the Americans as well. So it all depends on where the glut in the oil market is going to lead to. But certainly, I mean, some of these other ventures take 1 year, 2 years, even 5 years to actually put on and put off some of the deep sea drilling and so forth. So from that front, they're certainly nicely positioned. I just think at this specific price, where the oil is currently been over the last 6 months, it's a bit of a difficult situation for most of these fracking guys.
So you think possibly,
but they haven't closed. And these guys got the balance sheet to probably survive this. Certainly we think so. And on the other front, you've got some of the smaller eggs who will certainly disappear and probably not open their wells within a month again and do some more fracking.
So hot or not on Billiton?
I'm going to go hot. I just think at a price to book of 1.1, these guys are the cheapest it's ever been. It's not at a 0.5 price to book like some of the other guys, but these guys are certainly not indebted. They're not indebted. They don't need to go to the market to raise some more shares or rights issues, etc. So they don't need to sell some of their assets. They got first tier assets in almost every commodity that they do. We like it.
So does that mean in general you're fairly bullish at these prices on the whole commodity basket, including iron ore, copper, coal?
We're not on that front, but we think they're the leaders in that specific front. So they'll make money even if the iron ore price half from where it's now at the moment. So they're okayly positioned. We would like the other entry in this is probably Anglo from a diversified miner point of view. We actually like that a bit more, because they're playing the right commodities, but their balance sheets are certainly not the same as Billiton.